We're headed into what I would say is some of the most interesting times to be alive here in 2022. The currency is depreciating at a record level. We're having economic, political, and social instability all across the world. And so, what better person to make sense of all this? And more importantly, the best things you can do to prepare yourself than one of the most successful natural resource and commodities investors in the world living today? That is Rick Rule. And so, if you are excited about today's episode, make sure you hit the like button on this video. Give us a comment down below that says Rick Rule rules. Be sure to check out our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. That's Vizsla Silver. And Rick will review your natural portfolio right there down below, your natural resource portfolio for free in the comments. So, Rick, it's good to talk to you.
Jake, it's delight talking to you. I trust that your new year is beginning well. You and your family are, given the circumstance that you find yourself in, healthy and amused.
I am not complaining about the start to uranium out of two of the first three trading days in uranium stock. So I'm amused by that.
Well, certainly if you saw the social news out of Kazakhstan today, it would appear that there might be some cause for concern around uranium supply. And I suspect that the stocks may trade higher. For me, that's not necessarily a cause of joy. Given that I believe that the uranium stocks will double or triple from here over 3 years, I'm a buyer, not a seller. And given the fact that I'm a buyer, I'd like to see them lower rather than higher. I guess a mark of your enthusiasm for an asset class is when you own a lot of it and you want to see it cheaper so that you can buy more. And in that circumstance, my feeling with regards to the uranium stocks is I wish they would continue their decline rather than renew their ascent. I know that my wishes don't have much to do with the way that the market will perform, however.
You seem to be right a lot ever since we've talked, but I'm thinking you're going to be wrong on this one. We're going higher from here, not lower, unfortunately.
Well, Jake, I remind you of my successes, and I don't to try to remind you too often of my failures. The truth is, if you've been around as long as I and you've done as much as I, you've been wrong and you've been right on several occasions. And the truth is that I have enough uranium in my portfolio, and I'm a large enough shareholder of Sprott, which benefits many ways from an increased price of uranium, so that if I was wrong and if the uranium stocks took off, it would be okay with me. I just, as I say, I would prefer to own a lot more, not a little more. And given that that's the circumstance, I would like to see them cheaper rather than dearer.
And mining stocks has been natural resource and an area of your focus. How do you see commodities playing out in 2022, and how do you make sense of what's happening right now with seemingly ever increasing inflation?
Your listeners need to ask themselves a question around natural resources, including gold and silver, but mostly ex-gold and silver. And that question goes, in the next 2 or 3 years, do they expect a recession or a depression? Or do they expect that the continuation of money printing will generate enough liquidity that the economy will continue to limp along the way it's limping along now? If the answer is door B, which is to say that we don't have a recession or a depression globally, then most of the commodity sector, but particularly the industrial commodities, the stuff of humankind, oil and gas, copper, cobalt, nickel, fertilizer, all those things will do extremely well because demand for this stuff is increasing and society has underinvested in the means of production for a very long time. So your listeners need to ask themselves the question as to whether the demand side of the picture will be interrupted by a recession or a depression. If they don't believe that's the case, my belief is that you can buy the industrial commodity producers, the big ones, the good ones, with absolute impunity. Absolute impunity. But I would ask your listeners to ask themselves that question first. To be honest with you, I don't know the answer. I have a suspicion. I've been nervous about a recession and mercifully for all concerned been wrong for a fairly long time. I think the question around gold and silver involves a different question. And that question is, how long will it be before negative real interest rates cause institutional investors to begin to disintermediate their bond portfolios? For the last 40 years, Jake, the biggest investors in the world, the pension funds, the sovereign wealth funds, the university endowments, the ultra-large family offices, have followed investment guidelines that are roughly 60% equity, 40% debt. Yes, some carve-outs for private equity and stuff like that, but basically 60-40. 60-40 doesn't work in a period of negative interest rates, because if 40% of your portfolio is generating a negative real rate of return, and you're responsible for pension fund beneficiaries or the operation of the university 20 years from now, it doesn't work. And the people who run those very large funds have enjoyed a 40-year-long bond market. It's made their life very, very, very easy. They don't like the fact that that one decision has gone away. So the question becomes, when does the reality of negative real interest rates collide with the 40% bond holdings of the largest investors in the world? And what do they do with the money? If I'm right, which is to say that investors get tired of a 1.5% return in a world where the purchasing power of their specie declines by 6.5%. In other words, if they get tired of losing their beneficiaries 5% a year compounded and divert a fraction of the money that they have invested in debt obligations to precious metals, which is what they did in the 1970s, then I think you're going to have extremely interesting returns in the precious metal space. I wouldn't suggest to you or any of your listeners, Jake, that this is a certainty, but I think it's a probability. And I think the rewards associated with that probability are extraordinary. And so I would continue to advocate to your listeners and readers that they devote whatever portion they believe is prudent of their portfolio to physical precious metals in the case of insurance, and to precious metals equities for investments and speculation.
So talking about probabilities, I mean, how does one prepare? You talked about twofold: a recession, depression versus limping forward, hoping that they're printing enough liquidity to keep from this type of collapse scenario. And you said cutely that, you've thought recession, depression, but they've been able to limp it along, and you've been, wrong thus far. But let's talk about those probabilities and then the strategy. Then, do you prepare for both of them and keep a heavy percentage of cash and these types of things? Or how do you what's your advice on strategy for 2022?
The recession depression playbook from the 1970s was that despite the fact that your cash got eaten up by inflation, that you had to have some anyway. You had to maintain liquidity. You had to make sure that you borrowed non-recourse, which is to say, if you had debts, that they were tied to assets rather than tied to you personally, so they couldn't come after your family or your treasurer. Conversely, you had to loan money on a full recourse basis, which is to say, to the extent that you attempted to increase the yield by owning some debt instruments, you needed to place that debt extremely, extremely carefully. Traditionally, too, you need to invest in businesses that have pricing power. You need to invest in businesses that are price makers, not price takers. Warren Buffett wisely points out that well-run businesses where there's a substantial difference between the cost of capital and the return on capital employed, where they generate utility for their customer and where they have good operating margins, also generate wonderful inflation hedges and are surprisingly recession tolerant. So it might be that some of your listeners should consider for some portion of their portfolio one of those boring old ETFs like the Noble Dividend Aristocrats, where you're buying the best companies in the world, companies that are solvent enough that they've made or exceeded their dividend forecast every quarter for 30 years, in conjunction with other more normal investments for inflation, like precious metals, mining stocks. The most controversial prescription that I always have, and the one that always gets me the most negative feedback from your readers, is the contradiction between saying that your cash holdings will depreciate in terms of purchasing power, but you have to own them anyway. You have to own them because in a circumstance where there's liquidity generated volatility, a 2008 style collapse, that sort of retrenchment. If you have liquid assets, the cash will give you the tools and hopefully the courage to take advantage of these types of rapid declines that we saw in the market in 2008, rather than being taken advantage of. Two, someone your age who owns a home with a mortgage, if they get into a circumstance personally where servicing the mortgage is difficult, if they have cash savings, they'll have the ability to save their home, which becomes an important asset over time. It's important that we think about all these grand policy prescriptions and these big picture prognostications in the context of our own selves, what we need, because that's what we have control over. The third thing, Jake, and I've said this on your show many times, somebody your age needs primarily to invest in themselves and their business. I don't know the intimate details of your business, but I suspect that the best investment that you have made in the period of time which I've known you, which is about 3 years, has been in your own education, your own reputation, and your own brand. I'm not trying to say that you haven't worked hard and you don't have special talent, but my suspicion is in a universe of listeners that's as large as yours, there are other young people too who would benefit from doing what you have done, which is to say, develop the skills, develop the reputation, and develop the infrastructure to invest in themselves, which is, I think, critical.
So it's kind of three things then. It's like cash, your investments, and then self or talent, skill, business, whatever that might be.
Absolutely.
And
Absolutely.
as a percentage of cash, I mean, for someone like me, what is a reasonable percentage in your opinion?
I don't know enough about you. I can tell you that my equities accounts, where I try to be 90% invested, I'm only 65% invested right now because I've taken some profits.
Wow.
That isn't a strategy. It's cash waiting for deployment.
Got it.
And I think it varies person to person. By the way, for me, I personally consider bullion to be cash, volatile cash, because I know that if the price of everything falls, including my gold and silver, if there are better opportunities to allocate the resources represented by that gold and silver, I will sell them and I will use them as cash. For some investors, if they bought gold at $1,800 an ounce and they thought at $1,500 an ounce when there was a general market collapse, the fact that it was down $300 or $400 an ounce would prevent them from selling it and redeploying the cash. I'm not like that. I'm completely agnostic as to asset classes. And so for me, bullion constitutes good, if volatile, cash.
How much longer can we just continue to ride along the way we're riding until that Voltaire quote becomes a reality? That Voltaire quote about all fiat currency returns to its intrinsic value, which is zero. And there's a lot of old timers like you, no offense, that say, well, we always get through these things. But like reasonably, how much longer can we just print infinite money while the vast majority of people don't have they can't afford to live? You've got these labor. I mean, how much longer can you just continue to print money like this?
There's another great quote, Jake. I think it was Franz Pick, who said, "There's a lot of ruin left in a country that's great." Uh, I mean, the honest answer is I don't know. Uh, your friend and mine, Doug Casey, I once joked between Doug and I, we very accurately called 17 of the last 3 declines, meaning that you look at a circumstance and it would appear that, as an example, a currency that has expanded in circulation by 40% in the last 2.5 years must be reaching the breaking point. That a bond market which guarantees holders a loss must be near the breaking point. The truth is that there's fairly broad spread optimism in the economy, measured by equities prices, measured by the fact that, in November, something like 4.5 million people quit their jobs hoping to find better jobs. That isn't the sort of thing that people do when they're afraid necessarily. It might be something they do when they're disgusted. But when you look across the economy, it would seem that there is still fairly widespread faith in the government, in the currency, in the bond markets, and in the big thinkers. I don't happen to share that faith, but I understand that my suspicions are relevant only to me, not to the market. I believe that planning your financial future isn't so much very often betting on certainties, but rather, at least in terms of time, speculating and investing on probabilities. As an example, we've talked numerous times about the uranium price. I believe it's inevitable, almost inevitable, in the absence of a depression, that the uranium price goes above $70. When will that happen? I don't know. In the 2-year time frame, in the 3-year time frame, if the price of uranium were to go from $45 to $75, my suspicion is that an index of well-chosen uranium stocks would double or triple. And I think that's a probability. But what that means is I try to assign probabilities in return to various actions and various risks. And I try to right size my investment and speculative positions in uranium relative to other opportunities, factoring in probabilities, safety, return, and my best estimate of time. I've given up the sense, Jake, long ago, since I was your age, that I was going to be exactly right about much of anything. I just try to be relatively right. And I try to manage my risks and opportunities in a way that gives me the most acceptable rate of return.
Okay, so one of my big 2022 goals or intentions is to really turn the volume down on what could happen and how insane things are, and really focusing as much as I possibly can on what I can control in my own personal reality and my own personal results, taking control of those results. And there's kind of a few areas, obviously one of them is like health and fitness, happiness and family and whatnot, and then finances and success. And it's something that I would say more than anything that I've really learned a lot from you is you do a good job focusing on what you can control. And so one of my focuses is really like, look, like if things do get as bad as I feel like they could get, the reality is one of my only solutions is going to be to have as much financial independence as I possibly can have. Like it's besides, a couple other things, that's one of the things. And it's always been a focus of mine, but I want to make it more single-minded focus and take more responsibility and more control and more focus. And so if you were not, as you say, old, fat, rich, and bald, if you were not those things and you were, and you were 25, 30, 35, who knows? You were just the average American that, doesn't have that much savings, or maybe they do, but they're certainly not prepared for, a significant, building financial independence. What would you do if you were 25, 30, 35 and you were saying, I need to get my net worth to X amount of millions of dollars, and I need to disregard all the craziness in the world and just control what I can control. Take me there in your mind. What would be happening?
Well, the first thing I would do, Jake, is I wouldn't be the average American, because the average American is getting pinched between a rock and a hard spot. The average American is a situation taker rather than situation maker, which is to say that he or she is existing in a world that's created by others rather than created by themselves. What I was able to do in my 20s, what you were able to do in your 20s, and what I would do now in my 20s is explore in myself an activity that I was good at and enjoyed enough that I was hyper competitive at, that generated utility for others. People forget that you get rich, you sell a product or a service because that product or a service is worth enough to some other person that they are willing to pay more for it than it cost you to create. So in your particular case, you have the ability to make complex topics easy to understand to a broad audience. You have spent the time, despite your young age, to have a very vast audience at a very young age. You've done an admirable job of doing precisely what you had to do. If you were a postman or the average car salesman, all I would say is, Jake, stop spending, start saving. But you aren't. And the listeners that you have who get through this circumstance well will, first of all, reject the probability that they're going to be the average American, because the average American exists in a circumstance where the living standards that they have come to expect are probably unobtainable, given the utility that they're able to create in society. The second thing is, I would ask your listeners not to declare defeat, which is to say, despite the fact that the circumstance that they face is hard, if they allow the circumstance to cause them to quit trying, to quit striving, they've guaranteed that they're going to fail. The best defense, I believe, is a good offense. So despite the fact that I think trying times are in front of us, I'm in the midst of backing a team that built Everbank and creating a new online bank. I'm involved as an active investor, and I'm not telling you that I believe that times are going to be benign, but I believe that after you've invested in yourself and created within yourself an entity that generates more utility than you need to consume, that the second thing that you do is begin to invest that balance aggressively. The third thing, of course, is to remember that famous old poem or ditty about saving and spending. It goes like this, Jake: when your outgo exceeds your income, your upkeep becomes your downfall. Many people of any age prefer the concept of living rich to being rich, which is to say they measure their status by, I don't know, a Corvette or some bottle of wine that they can't actually pronounce. None of that, none of these sort of consumer things has anything to do with financial well-being or independence. And it's important that you don't merely live within your means, but you live well within your means. The idea that you're going to get ahead over the next 10 or 15 years without being a capitalist, to me, seems nil. And the first part of being a capitalist involves having some capital. And in order to have some capital, you have to make more than you spend. Now,
Now, the first one was rejecting the probability that you'll be an average American, and you said don't declare defeat. Um, and that's an interesting one because I feel like a lot of people have the know how to produce better results than they're getting. The problem is that they've, on some psychological level, declared this type of mental defeat to the circumstances of their life. And you said to reject the probability that you'll be the average American. Could you elaborate on that?
yeah, I mean, I think that I'm generalizing, but too many Americans don't focus in their life on generating utility for others. They don't think about creating value. They don't think about doing a job. They think about getting paid. And for those people, until they learn the lesson that to receive value, you have to create value, my suspicion is that the next 10 years will be substantially less benign than the last 10 years will have. And I think that people who listen to self-help channels like yours are of the right mindset to understand that being average will be extremely unpleasant. And whether or not they're average depends on them, not somebody else. I'm sorry, go ahead.
No, please.
As to the second point, don't declare defeat. As you know, I like to hang around libertarian conferences, libertarian students groups like Students for Liberty. And I remember at my own conference some years ago, some young entrepreneur was saying, I keep hearing all this stuff from Obama. I just want to quit. I want to throw in the towel. And I remember saying to this young guy, you know what? You're using Obama as an excuse to fail. The president doesn't even know you're alive. He doesn't care about you. He's nowhere near as much a threat to you as your attitude is. To hell with Obama. Go out, do some work. Find out how you can service your best 10 customers better. Think about your 10 best customers and forget about Obama.
That's so good. I think that, I'm some of my conversations are, with more the Doug Casey types of folks, and maybe they like use the word, this like new world order, and they would, but the ironic thing is a lot of people become a victim to it. They think because of the corruption of the fiat currency system, therefore they can't ever excel within it. It's an ironic thing, right? So I just think that that's pretty interesting that you said that, because half of it's a mental psychological game for your own success, right?
Yeah, Jake, if the state's going to steal 50, it means you got to make more. There's no way out. They have the guns. You have to deal with the cards that you're dealt. And if the cards that you're dealt keep you from trying to succeed, you, not them, you have guaranteed your failure.
You tell a story about when your life changed personally in terms of your fulfillment and happiness, but also in terms of an exponential leap in your financial net worth. A story you talk about something that your wife imparted upon you, and it's something you discuss a lot. And I think that on the theme of what we can control in 2022 and getting ahead financially instead of and rejecting the probability that we'll become another statistic. Can you talk about that story and why that's important to exceeding financially?
Yeah, I was newly married for a second time, financially struggling. I recovered a lot of lost ground, but I was still financially struggling. And I was focused on making money. I was focusing on reattaining the wealth that I had attained in my 20s and then lost, trying to figure out what to do with making money. And Bonnie, my wife, sort of literally sat me down, and she said, you need to focus on what you love to do and add value. And if you add value, if you do it in a way that's sustainable, in a way that brings you pride, pleasure, and joy, I think the money will take care of itself. But even if it doesn't, you're going to kill yourself doing what you're doing. And Jake, I'm not kidding you. Within a quarter, within 3 months of changing my focus from looking for a way to make money uh, and renewing the focus on how to make money for people who relied on me, it made an absolutely profound difference. Never mind in my psychology, that was a profound difference too, but in my financial result.
It's easy when you don't have money to focus on trying to obtain it. But I feel like what you're saying is once you got away from focusing on the fact that you didn't have any and you really wanted it, and you really committed to being great at what you did. And as you said, in order to receive value, you have to create value. And, is that's what you're saying?
Absolutely. Yeah, absolutely. And everybody, well, not everybody, well, I suspect everybody has something that they like to do that can generate value for others. It might be that they don't feel the fruits of that amazing immediately. And it's true too that you don't have to be your own businessman to cause that to occur. It might be that you don't want to run a business. But if you work for a business and you generate so much value for your boss that you become indispensable, one of two wonderful things happen. Your boss will pay you more, or some other boss will pay you more. I mean, that's what happens. If you are the best car salesman at the car lot, I mean, first of all, you're paid on units sold, of course. But if you build a big book of satisfied customers who keep coming back to you every time they need a car, if your bonus at the end of the year isn't sufficient, the dealer right across the street will welcome you and your book with open arms.
Interesting. Yeah, it sounds almost cliche, but it's like we've created our society is one where so many people are unhappy with their results, and so they think if they take other people's results, they'll be better. And so this whole system kind of like perpetuates itself. And I guess you can see why, from a psychological level, for the most part, why the honest rich continue to get richer and why the honest poor continue to do that, right?
Yeah, I think you have to accept the negative as a given. And you have to say, yes, all of that's true. Society is envious. Government is corrupt. As as a species, if you will, not as a species, as a subspecies, people in developed countries have lived beyond their means. That's all true. So what? If you abdicate, for sure you become a victim of the circumstance. There's an absolute guarantee. If, however, you're proactive, if you decide that there will be volatility almost certainly in the future, and the consequence of that is that you're going to maintain some liquidity so that you can take advantage of the volatility rather than being taken advantage of. If you understand that trying times try your competitors more than they try you, because you're focused on delivering utility to your customer and they're focused on extracting rent from your customer. In other words, your market share, if you work hard, increases during bad times, doesn't decrease. If you focus on the rational allocation of capital, and in particular, if you focus on living well within your means, you will do better than other people in any circumstance.
I like how simple you make everything.
Well, it's very boring. It just happens to be true.
Yeah. So how do you, that's in general, so much of it is self-motivation from simplicity or boredom or the monotony of what you're doing. How do you, so I've noticed so much of my biggest struggle is being able to remotivate myself and refocus myself. How have you been able to do that over your career?
Well, sometimes I take a couple of days off. That really helps, just get yourself in a whole different circumstance and do something else that brings you joy. But the truth is that I was lucky enough to find a vocation and an avocation. The vocation being investing and the avocation being educating. That brought me joy and brought utility to others. And I'm, as an example, Jake, I might not look it, but I'm retired. Which is to say, I quit doing any kind of work that didn't amuse me, and I only do things now that amuse me. I didn't quit work per se. I work 1,800 hours or so a year, but I decided that I was rich enough that I wouldn't burden myself with any job that made me deal consistently with a regulator. So I gave up my securities licenses, although being a licensed securities person made me a lot of money. And I gave up any managerial responsibility. I used to have a couple hundred people reporting to me. Now I have one employee and I report to her. And organizing your life in a way that clears out the unnecessary, particularly the unnecessary which causes you aggravation, and focuses you on how you can create value for your customers, is something you need to do. Motivation, to me, doesn't enter into it, I guess, because I have so much fun doing it. It did motivate me to retire because I found that there weren't enough hours in the year to do the stuff I didn't like doing. And I just decided, since I don't have to do them, why am I doing them?
That's a good question. Uh, on the subject of making 2022 one's best year financially in their career, this channel particularly is devoted. There's other areas of life that are important too, but this particular one is focused to financial prosperity and the independence and freedom that it gives one. And so that's my utility I'm trying to bring to the listeners is that these conversations help them have a measurably better financial year. You've talked about a lot of fantastic stuff. Is there anything else that I've missed that I haven't asked from this equation as we kind of deliver this package to the viewer?
I don't think so. The only dichotomy would be that in the near term, investing in yourself is what you invest in. But investing financially.
Sometimes that's abstract. What do you mean by investing in yourself for someone that says that sounds abstract?
Well, for you, as an example, spend 2 hours a night, if you have it, scouring the internet, trying to figure out guests who would bring meaning to your audience life. When you'd rather be doing something else, you'd rather be drinking a glass of wine, you'd rather be going for a run, you'd rather be reading a book, make yourself out hustle other hosts. And don't out hustle other hosts by merely listening to presenters who amuse you. Just think of every one of those presenters as being somebody who can or cannot add utility to your channel. Think about the questions that you could ask them. Think about how you could organize the interview in a way that benefits your audience as you've come to know them. In other words, apply yourself to the process of the utility that you propose to deliver.
So I wanted to talk uranium too, but we'll do that in a separate conversation. For everyone, pretty soon here we'll make an announcement. Rick has an awesome online uranium event coming up here soon. Obviously, Rick must be quite excited about uranium, so we'll do a lookout for that. He does a free review of your natural resource stock portfolio. I'll link that in the description. Our sponsor is Vizsla Silver, one of our favorite silver and gold mining stocks. Do you own any Vizsla, Rick?
Pardon me?
Do you own any Vizsla?
I, in fact, do. Vizsla is one of the two sort of penny dreadful exploration stocks that I do own.
I heard that. I was with Mike in Mexico, and he told me that he was happy to hear that Rick Rule's an investor.
Understand that just because I'm an investor doesn't guarantee that they'll enjoy exploration success. Nobody should mistake those two. But, within the sort of mantra, it would be nice if good guys finished first. I like the Vizsla guys. I like the exploration results I've seen. Of course, everybody needs to understand that exploration is extraordinarily high risk. And I'm psychologically and financially able to bear that risk. The rest of your viewers will need to take their own circumstance in mind. I might mention on that, Jake, following on your suggestion, I'm happy to review all of people's natural resource portfolios, including, of course, their Vizsla. I rank them by my own parameters, of course. The rankings are 1 to 10, 1 being best, 10 being worst. All you have to do is go to Rule Investment Media. List your natural resource stocks. As I've told your listeners before, please no crypto, please no tech stocks, please no pot stocks. That's not what I do, just natural resource stocks. And I'd like to say, Jake, too, that we'll be informing your listeners about our Uranium conference. It'll happen in late March. I always try to generate utility for my customers. And I humbly believe that it's going to be called the Uranium Investing Bootcamp. The best 6 hours that a uranium speculator could spend. More information to follow. Suffice it to say, it'll be $100 to attend online. And any subscriber who doesn't believe that they got their $100 worth can simply ask me for a refund, and I'll give them their $100 back. More details to follow from your friend Jake Ducey.
Yeah, so I wanted to talk uranium, but we'll do that in a separate conversation. So be on the lookout for that. If you enjoyed today's episode, make sure you hit the like button, subscribe, bell notifications, what notifies you for new videos. Even if you're already subscribed, double check you hit that bell notification. Give us a comment down below. This is Rick Rule Rules. And give us a comment down below for the good old-fashioned YouTube algorithm. Rick, I want to thank you for your time today.
Always a pleasure, sir. Thank you for having me back.